NFP Friday is always so important to currency traders, and to discuss this week's key fundamental release and what it means for the USD, I'm joined by Michael Boutros from FXCM. Michael, let's start by talking about the euro-US dollar. It currently sits comfortably above the 130 mark, and there has been no fundamental change in the situation in Europe. So why have we seen this rally?
Well, there's been a lot of optimism with regards to the ability of lawmakers or officials over in Europe to come up with some sort of idea or some sort of plan to at least quell market concerns in the meantime. You know, we've seen strong figures, economic data coming out of the U.S., and overall risk appetites continue to be pretty well supported at these levels. Again, this rally that we've seen in the euro-dollar has been somewhat substantial, but we really haven't cracked any key levels. Again, the 133 handle for me is really, if we do see a topside break above that level, that's really where it starts to get a little bit more concerned about further euro appreciation. But interim support for the euro right now is right below at 130.40, and the top that we have in place is still 132. That's been holding pretty well.
So what are you expecting from Friday's NFP, especially considering the ADP employment report fell short of expectations?
Right. Well, again, you know, seasonality trends start to kick in. We're looking for a print of somewhere around 145, 150,000, coming off a 200,000 print last month. I think a lot of attention will also be placed on the unemployment rate to see if we do see a hold of that. We're expecting that to hold at 8.5%. Keep in mind we do have further discouraging workers leaving the workforce, so that could also put some pressure on the unemployment rate, push it lower. But when it comes to the dollar, I think on the extremes, the dollar has potential to see some sort of rally, meaning if we see a very weak print, we could get another bout of risk aversion flows that might prop up the dollar, being a catalyst to sort of reverse some of these euro gains. With the same respect, if we see a really strong print, it kind of dampens expectations for further quantitative easing from the Fed. So that could also be a dollar positive play. But anywhere near expectations or slightly above, I would expect it to continue to support this rally that we're seeing here this month.
I know I've asked you this before, Michael, but there is increased talk about the changing of the dollar's relationship with risk. If we saw a very weak NFP, for example, would this automatically mean a strengthening of the US dollar?
I would say if it was a very, very damp print, if it was a very low print, yeah, I would still expect to see dollar strength. You know, there's been a lot of debates on whether the dollar is going to maintain its reserve currency status or a haven status, as it were. But when we look at still the alternatives, there's really not much on the table. You know, the only thing that's concerning me is the Fed coming out and this pledge to anchor rates down through 2014 is really what could put a damper on further dollar strength. But when it comes to risk aversion, I think U.S. Treasuries and the U.S. dollar will remain the haven play of choice still.
Generally speaking, it's been a positive start of the year in terms of fundamental U.S. news. Do you expect this to continue, or will it tail off over the coming months?
I think it might tail off in coming months, just as we get some further clarification until we see what's going to happen in Europe. You know, the threat of the European crisis continues to loom over the global economy as a whole. So I think we might see the data start to tone down a little bit, but in general, the metrics in the United States continue to look upbeat. You know, the last couple of weeks, we did get a couple of weaker prints after a string of really nice strong prints in late December and early January. But I would think that we would continue to see strength in the U.S. market, considering that we're a little bit more isolated from what's going on over in the European region. But yeah, I think we're going to continue to move higher this year. Maybe not quite as robust, but we should maintain pretty well supported at these levels.
Okay, thank you, Michael. I'll hopefully be catching up with Michael next week for an episode of Targets in Focus. But for now, goodbye.